Good evening, class, and welcome to our advanced taxation class for today. Our topic for today is special businesses. My name is Chimaroke, and today we are going to be looking at a few special businesses and how they are treated. We are going to be focusing on just a few that are normally being tested by ICANN exams. So majorly, we'll be talking about shipping or air transport or courier companies. And we'll be talking about, there are two actually, shipping or air and courier companies. And where's the other one? Where is the other one again? Telecommunication. These are the two we will be talking about. We will not talk about taxation of insurance company because it is not really well treated in ICANN. ICANN don't test it. But I will ask you if you can memorize the formats. If you can memorize the formats, then you can be sure that if ICANN brings it, that is, if ever they will bring it, then you can be able to apply it. We will not talk about taxation of banks. We will not talk about taxation of unit trust schemes. We will only focus on what ICANN has brought in their exams, which is shipping or air transport and telecommunication. All right, so let's go now. At the end of this chapter, we are expected to know the procedure for assessing businesses in shipping or air transports and courier services, how they are being taxed in Nigeria, especially now the provisions of the Finance Act 2019. All right. So Companies Income Tax Act contains special provisions with regards to company that are deemed to be called special business. These are those companies that are engaged in shipping or air transport business, as well as those in the wireless, telecommunication, and insurance businesses. Now, out of these three, we are going to concentrate on two. And the third one, which is insurance, I will just only refer you to memorize the formats. It has a 1% chance of being tested. But even at that 1% chance, I will still ask you to memorize, if possible, the formats. Also, Finance Act 2019 and 2020 introduced some amendments to the Company Income Tax Act with respect to taxation of insurance business, estate companies, real estates. All of these are special business. You may be wondering, why are these people called special business? What is so special about them? Now let's look at non-Nigerian companies. Okay, so before we talk about non-Nigerian companies, what do we mean by the term non-Nigerian companies? Any company that is not incorporated in Nigeria, whether the company is domiciled in Nigeria, either as a branch or as a head office, either as an overseas branch or so, as long as it is not incorporated in Nigeria, it is a non-Nigerian company. Okay, so sometimes you can see some companies in Nigeria, and we know that these are owned by foreigners. These are owned by foreigners. So mostly, because it is owned by foreigners, they only just merely register it in Nigeria so they can operate in Nigeria. But the actual incorporation was done not in Nigeria. So it will not say it was founded in Nigeria. It was not founded in Nigeria. We can look at names such as some of the South African owned companies in Nigeria, such as MTN. Now that's a perfect example because they are into telecommunication. So I will be drawing examples using MTN to illustrate the point. Now, MTN is a non-Nigerian company involved in telecommunication. Globacom is a Nigerian-owned company involved in telecommunication. When I look at it, Globacom is not a special business. It is controlled on the normal business. Why? This is because the worldwide income that Globacom gets from its telecommunication business belongs to Nigeria. So even if we have Glo Nigeria, which is the father or the founding company, let's say we have Glo South Africa. The operations of Glo South Africa belongs to Nigeria. The income belongs to Nigeria. Then we also have, let's say we have Glo America, Glo London. Every of their affairs belongs to Nigeria because Glo is incorporated in Nigeria. It is not a non-Nigerian company. And so it does not belong to these special businesses. Now looking at MTN Nigeria. MTN Nigeria is not a Nigerian company. Though it is domiciled in Nigeria, carrying out its management function and operations in Nigeria, it is a non-Nigerian company earning income in Nigeria. And so they are founding a company in South Africa. When they are consolidating all their income, doing consolidation, they will consolidate to South African currency. They will take everything that is being made and they will push it to South Africa. It means they are repatriating it to South Africa. And so the worldwide income of MTN belongs to South Africa. But the question is, since South Africa has a fixed base in Nigeria, also have an economic presence, significant economic presence in Nigeria, in the sense that majority of the people in Nigeria have an MTN SIM. It has a significant economic presence in Nigeria. It means the activities that goes on in Nigeria should be taxed. And so only the activities in Nigeria that is going to be taxed before it is repatriated to South Africa. So we have just used an example of MTN Nigeria, or MTN, so to speak, to illustrate telecommunication that is into the special business. Look at airline. Before I talk about airline, I want to talk about this joke. Someone says that Why is it that if a car conveys goods from one point to another, we'll call it shipping? Why not use ship for shipping? And why is it that if a ship conveys goods from one point to another, we call it cargo? Why not use cargo for car and shipping for ship? It's just a joke. So because we are into the shipping business and we'll be dealing with cargo. All right. Now, a non-Nigerian shipping or airline transport is into the special business. We can think of British Airlines. We can think of Etihad Airlines and other airlines that are non-Nigerian and they operate in Nigeria. And we know that Air Peace is a Nigerian-owned company and it doesn't belong to this category. Doesn't belong to this category. So when British Airlines is moving from UK to Nigeria or from Nigeria to UK or to the rest of the world, the worldwide income of that airline goes to UK and only the activities in Nigeria get to be taxed. Now, the provisions says that in shipping or transport business, the profit or loss of such company deemed, now underline the word deemed. We'll come back to that word, deemed, to be derived from Nigeria is the full profits or losses arising from the carriage of passengers, mails, livestock or goods shipped or loaded. Now the operating word is into an aircraft in Nigeria. So when they say loaded into an aircraft in Nigeria, we are talking about origin. Now, this is not the drink. Origin, this is not your state of origin. This is not the drink called origin. This is not your state of origin. This is the origin of the journey. So I will say journey's origin. Now let me give you an example of journey's origin. You are coming from, let me use an example from Lagos. You are coming from Ikorodu and you are going to TBS or to Obalende, or let's say to Oshodi, and you are using a bus. Now, the bus ticket is being sold at Ikorodu. And as we enter the bus from Ikorodu, it means the journey originates from Ikorodu. Now, they usually tell you that the agberos on the road, that is the name given to all these touts that takes money from drivers as they start their journey. So they want to settle them. Why? Because they are loading from their park. The journey originates there. Okay, so now as the journey moves, they drop passengers. They're not picking. Let's say they're not picking. They are just only dropping. Let's say they drop some of them at K2 and the journey went and they dropped at Oshodi. When they drop at K2 Park, they will never give those people there because no journey originates there. Even if maybe the vehicle got spoiled at K2, and they had to bring another vehicle to convey them from K2 to Oshodi. The mere fact that a new bus came, they're not going to settle because the original settlement has been done at Ikorodu. When they arrive at Oshodi and they are all getting down the bus, alighting from the bus, they will not need to settle. This is because at the journey's origin, the people that have the park where the journey originated have made their revenue. And so we are not considering journey's destination. We are not considering destination. So destination is not being considered, origin is considered. And so as we are crystallizing this topic, look out for origin. And how will you know origin? It means passengers, mails, livestock, goods will be shipped from Nigeria. It means they are loaded into an aircraft in Nigeria. That's origin. Now it says here, this does not apply to passengers, mails, livestock, or goods which are brought into Nigeria. This is destination. This is destination. So we look at origin. So this is origin, while this is destination. We're not looking at destination. Okay? Then they said solely for transshipment or from one aircraft to another in either direction in an aircraft. So when you are transshipping or transloading, okay, I once wanted to go to the east from Lagos. I have gone to Onitsha, which was not my destination. After going down from the Niger Bridge, and I got to Onitsha there, the vehicle, I was like, we are only 2 passengers. And so our boss had to, the driver had to transload me to another bus that is going my way. And so I didn't have to pay anymore. So now this is what we call transshipment. It does not cover that. It only covers where the journey started. All right, so let's go to the sum receivable in respect of passengers, mails, shipments, and every other thing carried in Nigeria as referred to as above. That means in origin, there shall be applied the following. Now, 1, there is the ratio of profit and loss of an accounting period before depreciation to the total sum receivable of the business of the company. What do they mean? They are looking out for something called adjusted profit ratio. I call it APR. What it means is this. They are going to get a ratio between the profits before depreciation and the company's revenue. So it means that this is your revenue, you less cost of sales, COS, and what you have here is your gross profits. Then you less your OPEX, which is operating expense, excluding depreciation. So now you now get your earnings before depreciation. Okay, before depreciation, and tax. So this is your earnings, or your depreciation is being charged. This earnings, I'll call it BD, profit before depreciation and tax. I'll change it to profits divided by your revenue times 100%. This is now a ratio. This is what they called your adjusted profit ratio. So most times you are not getting this. If you are not getting this, maybe because they gave you a net profit and the net profit depreciation has been deducted, you will need to go back and add it so that you will derive this. And so they call it adjusted profit ratio. It is calculated as worldwide profits all over worldwide income times 100%. Now, this worldwide profit is allowable profits. Allowable, which is it's not the accounting profit now, it's going to be like the taxation profits. So it says here that there is going to be something called the ratio of profit or loss to the total sum received. This is what it is. Then second, there shall be the ratio of depreciation, call it depreciation ratio, to the total sums received as certified by the tax authority of any other country where the non-Nigerian company is registered, to the satisfaction of the revenue service. So it means this your depreciation all over your revenue, but we'll call it worldwide depreciation all over worldwide income times 100%. Somebody is asking a question. Please, can you write out the formula properly for us? I will do that, but relax. I will still give you the steps where these formulas will be written down. So, but we are just explaining what they are saying here. Still saying, okay, all right. Now, it means that there's going to be this ratio. This ratio, you know, depreciation is not allowable. But you see, they are going to give you depreciation and it will be taken most times in lieu of capital allowance. They might also tell you the proportion of depreciation to be taken as allowable depreciation or capital allowance. So we are saying here that it will be to the satisfaction of the FIROS. What the other country is applying to their own countries, it must be to the satisfaction of FIROS before these ratios can be applied. Now, this ratio, Nigerian income to arrive at the capital allowance for the relevant year. The amount arrived at shall be the full profit or loss which shall be liable to Nigerian tax. All right, so now let's get the steps down for you. All right, so let's go to the whiteboard and see steps. Step 1, ensure that the company is A non-Nigerian company. B, into air or shipping or telecommunications. That was the first step. The second step, step 2, identify all Nigerian income by looking out for origin rather than destination. Step 3, determine the worldwide income by categorizing as follows. A, Nigerian income. B, non-Nigerian income. Worldwide income. So you see here in step 3, you are getting the total income. You may be given the total income, but you need to categorize them into Nigerian income and non-Nigerian income. Step 4, find the worldwide allowable expenses and deduct from worldwide income to get worldwide profits. So what we have here is worldwide or global. So in case the CB writes global, it's the same thing, global income allowable expenses global or worldwide profits. That's step 4. Step Step 5, get the APR and DR ratios. So I will say adjusted profit ratio, which is called APR, is equal to worldwide profits all over worldwide income. Can say times 100%. Then you can say, so let me say this is A, and this is B. Depreciation ratio, I call it DR, is equal to worldwide depreciation all over worldwide income times 100%. Now, what it means here is this. If you have a profit of 100,000 and your income is 1 million, it means that your adjusted profit ratio is 10%, meaning that your profit is 10% of your revenue. Now, if your worldwide revenue, let's say, is 1 billion, and your worldwide profit is 100 million, it's still 10%. It then means that if your worldwide profit is 10%, that means all member countries where they have operated upon, they are going to use 10% across board to determine their accessible profits. The same thing with depreciation ratio. Let's say your depreciation ratio happens to be 3% of your worldwide income. It means across all board, your capital allowance will be 3% of your country's income. That is the essence of this. So let's go to step 6, where these ratios are applied. Step 6, apply the ratios in step 5 on the Nigerian income. So you see why in step 1, we need to know Nigerian income. So we need to apply the ratios in step 5 on the Nigerian income to determine the Nigerian accessible profit and capital allowance as follows. Now say Nigerian income. Let me call it NI. See, it doesn't look like NI. Let me call it NI, Nigerian income. you double underline it. You will now say Nigerian, or we'll say Nigerian deemed accessible profits. It's going to be adjusted profit ratio times Nigerian income. Then Nigerian deemed capital allowance is going to be depreciation ratio times Nigerian income. And this is going to be your Nigerian total or taxable profits. So this is what we are going to be achieving. So step 6 is where we determine what the total profit will be. Then we will now calculate our tax. So this is step 6. So step 7, determine the tax due or payable in Nigeria. Due or payable in Nigeria. Forgive my writing. I know I don't have a good writing, but those of us who are watching maybe outside Nigeria or so, you may want to forgive my writing. All right, so let's go now to our notes. Now, the amount arrived at from all this ratio shall be the full profit or losses which shall be liable to Nigerian tax. So now it should be worthy of note here that any business that is in the special business is never seen as a small business and never seen as a medium-sized business. So whether they coming in of Finance Act 2019 or 2020 or not, we are going to be taxing them at how much? 30%. Now look at this note. Note that this situation apply where the revenue is satisfied. So when we are taking these ratios, APRO and DRO, the FIRS should be satisfied that the tax authority of that country where they are going to repatriate the revenue to, FIRS will satisfy themselves that that country computes and assess their taxes on a basis that is not materially different from what is being done in Nigeria. So the way they calculate their capital allowance, the way they calculate their allowable expenses, it is somehow the same with Nigeria. And if there is a difference, there is no material difference. Then if there is no material difference, then FIRS will, if satisfied, they will certify. Now, note what I have said here. They are first of all going to be satisfied about the basis for taxes. And then they will certify the ratios. So when they are satisfied, they will certify. That's the point I want to make. They are satisfied, they are certified. Where the ratios referred above cannot for any reason be satisfactorily applied, then they cannot certify the ratios. The profits deemed to be derived from Nigeria may be computed on a fair percentage on the full sum receivable in Nigeria. So it means that when they cannot ratify or certify the ratios, they are going to give you a fair percentage in your question. Now look, use this fair percent to compute and take it as the deemed profits or the deemed accessible profits which will be subjected to capital allowance and taxes. When this occurs, the company has within 6 years to claim its liability. And they can say that the company also has a right to ask the FRS to compute based on the APR and on their own fair percentage, and they have the right to choose which one to use. If the company fails to agree with the FRS shall give notice to the company of refusal to admit the claim with respect to the objection. And of course, you know, we've treated objection and appeal procedures they can appeal. Now, where there is an agreement on the two ratios and the Nigerian tax authority is convinced that Nigerian companies enjoy similar treatment in that other country, then the ratios shall be adopted because they will be certified. Now, this is the procedure. All these things are just steps I told you are what is being done here. So I will not want to go into that again because this has been given, I've given that as the steps. It's not materially different from here. Let's look at this illustration. Illustration 9.1. The statement of comprehensive income of Pute Oriogun Airways. So now we've heard of the word airways. So step 1 is coming into effect. Airways. A company located in Germany. So 2 things. Airways, Germany. Non-Nigerian company engaged in airline. You know, this is special business. So everything about special business starts activating in your mind. Now you look at it, this is 2015. Normally, special businesses end their accounting year in December. They were incorporated in 2015, I wanted to say, but now they are ending their accounting year in Nigeria in 2017, December 31st. Now, note here that the preceding year basis is still being applied. It's still the preceding year basis. So this is going to be year of assessment 2018. All right. So I want us to do something. This is going to be how will I call it? An interactive class. You can even unmute and talk on this one because I want to ensure that we know how to determine origin and destination. So I'll be asking a series of questions and you'll be telling me if it is origin, if it is destination. Now, income from passengers freight out of Nigeria. Is this origin or destination? What is your answer? Maybe I was not heard. If you want to unmute to answer this, feel free. If you want to chat to answer this, feel free. I'll take it again. Income from passengers freight out of Nigeria. Is this origin or destination? Your answer, please.
Can you hear me? Origin.
Origin. Yes. Why do you say origin? This is because they are going out
out of Nigeria.
Nigeria. It means they must have been loaded
In
in
Nigeria.
Nigeria. So this is origin. Now, income from passengers freight into Nigeria. Origin or destination?
Destination.
Sorry?
Destination.
Destination. Thank you so much. This is destination because they are coming from other places into Nigeria. So it didn't originate in Nigeria. Beautiful. Income from passengers freight on other routes. Is it origin or destination?
Passenger freight, other routes. Destination.
Destination.
Yes.
Okay. Why will you say it's destination?
It's coming from other routes to.
Okay. Income from passengers freight
On other routes.
So this is non-applicable because when they mean here other route means it may be coming from Germany to US. It doesn't even affect Nigeria. It may be US to UK. Other routes. These only ones that affect Nigeria. This one is from maybe Germany to Nigeria or maybe UK to Nigeria. This first one is maybe from Nigeria to Germany or from Nigeria to US or to UK. Other routes does not affect Nigeria. So the ones that is Nigerian income here is this one we have identified as origin. All right, so we have identified that. So let's do this. Now, although we are giving this worldwide income, it is good to segment them, like I said. So let's go now, exercise 9.1. Let's do this. Illustration 9.1. The name of the company is Kukute Oriagan Airways. What a name. Kukute Oriagan Airways. I will now maybe put Germany. So you know this is a German Airways. Okay. Now they are telling you this is what they got in December 2017. Okay, so let's jump straight to look at what the question is asking you. It says calculate the tax payable for the relevant tax year. So we are going to calculation of tax payable in year of assessment 2018. Right? So what we will now do, we will say Nigerian Nigerian income. Okay. Nigerian income, 300,000. Only one. So I'll come here and put it here. 300,000. Non-Nigerian income. Non-Nigerian income. Now say into Nigeria, 1 million. This is 1 million. Other routes, 3,600,000. So when you add them, this is 4,600,000. Then close it up, call it global income. You can use the word worldwide income if you want to. So this is your global income, which is the same thing here. The next thing is deduct allowable expenses. What are they? Let's look at the allowable expenses. We have administrative expenses. So this is, before you look at them, look at anything here, whether there is anything to adjust. No, nothing to adjust. So administrative expenses, 1,620. Admin expenses, 1,620. Then we have financial expenses, 340. Okay. Then we have depreciation. You know, we want to derive profit even before depreciation. And even apart from that, depreciation is never an allowable expense. And so we are looking for profit after all allowable expenses have been deducted. And so depreciation is not an allowable expense, so we will not talk about it. We will not talk about, we have taken this, we will not take this. And they said other disallowable expenses, we will not take this. And so we have our net profit for the year. This is not a true profit that we will use. So that's why they call this one adjusted profit. We are not going to be using this because this is too small. We have adjusted it to get our adjusted profit. So all these are allowable. This is going to give us 1,960,000. 1,960,000. Right? So this is your allowable expenses. So when you deduct, what do you have? So let's deduct. This is going to be 0, 0, 0. It's going to be 0. 10 minus 6 is 4. And this is going to be 9. So 18 minus 9 is still 9. So this is 3 minus 1. This is going to be 2. 2,940. Let's be sure we've done the right thing. 4,900,000 minus 1 960,000. All right, we have done the right thing. All right, so now this is going to be our global profits. Is somebody asking a question? This is going to be our global profits. Can I detect a question being asked? Please state your question, let me hear. I'm simply following the steps I gave to you. Okay, so I want to believe no question. Before I go on again, let me reiterate all the steps I've taken so far. We have identified that it is a special business because it is into airline and it is a non-Nigerian company. 2, we have also identified the Nigerian income as distinct from the non-Nigerian income, and we have determined our global income. The global income has been segmented into non-Nigerian and Nigerian. This is because we will need the Nigerian income specially for tax purposes. Thirdly, we have deducted all allowable expense from global income to get our global profits. When that is done, we'll go to the question, and we see here that the Federal Inland Revenue Service is satisfied, keyword, that the Tax Authority of Germany computes and assesses the profits of the companies operating aircraft on sustainably similar basis as Nigeria. And because they have done that, they have certified the ratios. So because they have certified the ratios, we'll go ahead and calculate your adjusted profit ratio. So you come here, your adjusted profit ratio, which is called APR, is going to be global profits all over global income times 100%. So it means that your global profit is 294,000 all over 490,000 multiplied by 100%. So what is it going to give us? Let's calculate now. 2,940 now divided by 490,000 multiplied by 100. This is 60%. So your APR is 60%. So this is your APR ratio. It means that 60% of your revenue is profit. 60% of your revenue is profit. And this profit is taxable. I mean that 60% of your revenue is accessible profit. Adjusted profits, accessible profits. Then we'll look at our depreciation ratio. It's going to be your global depreciation all over your global income. Now you were given, okay, times 100%. Now you were given depreciation here in the question. Depreciation here is 588,000. So we'll look at it now. 588,000 divided by 4,900,000 multiplied by 100%. So your DR Democratic Republic, just a joke. Your DR is going to be what? Let's compute. 588,000 divided by 490,000 multiplied by 100. That gives you 12%. So it means that 12% of your income is depreciation. Now, because Nigeria has certified this ratio, we are going to apply it. So you will now come here and say, Nigerian total profit and tax. So you will say Nigerian income. What is our Nigerian income from what we calculated the other time? Is 300,000. So this is 300,000, double on the line. Then you come here, Nigerian accessible profits or income. Call it accessible profits. Open a bracket. 60% of 300,000. That should be 180. 180. 6 times 3, 18. 60%. Because 50% is 150. So 60 is 180. Now, less Nigerian capital allowance. This will be 12% of 300,000. What would that be? 36. That should be 36,000. That's 36,000. Now, when you less these two figures, this is Nigerian total profits, which is taxable. So let me just confirm these figures I used there. 12%, let me divide this one by 100, multiplied by 300,000. Let's just be sure. That's 36, that's fine. Then let's do this other one. 0.6, which is 60%. 60 divided by 100 times, what did I do? 60 divided, 60
0.6 times
divided
300,000.
by 100 times 300,000 is 180. So 180 minus 36,000, that gives me 144,000. 144,000. So this is your Nigerian profits. So you will say capital, sorry, did I say capital? Company income tax at 30% of your total profits. So let's see. Multiplied by 0.3, that will give you 43,200. 43,200. 43,200. So this is your tax.
It's
Any question? Do I sense a question there?
no question, sir.
No problem. So let's see what was done here.
Are we not going to calculate the TET?
No, we're not going to
Why?
calculate it because tertiary education tax is only for Nigerian companies. So this is a non-Nigerian company. I like that. I was waiting for that question. So TET is only computed for Nigerian-owned companies. So this shows that you are really catching the points. You are connecting the dots. That's an intelligent question you just asked. And you see what we calculate is the same with what the pack says. Now, let's go into another question. But before we do that, just a moment. Welcome back. Our next question is question number 9.2. Now let's analyze this. The statement of comprehensive income of a foreign airline. So you don't even waste your time. They have told you foreign airline. So it's special business. The name of the airline is AFEL Airways, operating from France. For the year ended, well, I initially stated that most of them have their account year ending in 31st December, but that is not cast on stone. They can end as any other company ends their accounting year. Like this one now ends in March 31st, 2017. We know it is a preceding year basis, so it's going to be year of assessment 2018. All right. Now, I want us to look at this like we did before and identify origin and destination. The first one, income from passengers freight into Nigeria. Origin or destination?
Destination.
Destination.
Destination. Income from goods loaded into aircraft in Nigeria.
Origin.
Origin.
Origin. Income from passengers freight out of Nigeria.
Origin.
Origin. Income from goods into aircraft on other routes.
I don't know.
Eh?
Unknown.
This is not available or not applicable. So all these ones we have O. Nigerian income. Because so what do? Let's start this question by looking at what we are asked to solve. We'll go here. The Federal Inland Revenue has agreed to allow the company to claim the amount charged as depreciation into the accounts in lieu of capital allowances. So what you see here is they are satisfied and they certify. Now, salaries and other expenses includes a new DC aircraft. We'll talk about this. We'll talk about all of these when we are solving. Now, they're asking us to prepare a statement showing the total profit for Nigerian tax purposes and income tax payable by the airline for the relevant year of assessment. They say tax rate is 30%. So that's it. So what's the name of the company again? AFL Airways. This is 9.2. Illustration 9.2. Airways, France. Now say total profits and tax for Nigerian purposes for year of assessment 2018. That is what we are asked. So now we are going to be doing our double naira sign. Double naira sign. We will say Nigerian income. So Nigerian income, the A part is here. They said passengers freight into Nigeria. Passengers into Nigeria. How much is that?
600.
Okay, passengers freight in Nigeria, not into, in
Mm.
Nigeria. Passengers in Nigeria. How much was that again? We have 440. 440. Then we have passengers. Okay, so that is goods. Then this is passenger. So this one is goods. Let me use another language. It's still the same thing. Goods originating from Nigeria. B, passengers originating from Nigeria. 360. 360. When you add them up, so 4 plus 3, 7, 800. This is 800,000. Then we come here, non-Nigerian income. So we can say A, passengers to Nigeria, 600. Passengers to Nigeria, 600. The next one is goods on other routes, 1 million. Goods on other routes, 1 million. So this is 1,600,000. So when you add them together, this should be 2,400,000. 2,400,000. So as you can see here, this is the 2,400,000. So we have successfully gotten our, I'll use worldwide now. The other time I use global. Worldwide income. All right. The next thing is to less allowable deductions. So what are these allowable deductions? Let's start with the things that will be adjustable. Salaries and other expenses. So let's start with salaries and other expenses. So we say salaries and other expenses. Now, how much was given to us? 1,600,000. So we have 1,600,000. All things being equal, this 1,600,000 is supposed to be allowable. But now they are telling us certain things here in our expenses here. They said it includes deposit for a new DC aircraft, 160,000. So now this DC aircraft is not an operational expense. It is a capital expense. It's an aircraft. So it cannot be under that. So we are going to remove this 160 from this 1.6 because it's not going to be allowable. So you remove 160. What else can we remove? They said payment for VIP lounge at the International Airport, Kaduna, to Nigerian Port Authority, 24,000. Now, is this going to be allowable or disallowable? Now they are paying for VIP lounge. VIP lounge at the International Airport in Kaduna. To me, this is not going to be enjoyable by all the people in the airline. Only the VIPs are going to enjoy this. So this is a kind of biased expense. And to me, this is not allowed. So I'm going to deduct it, 24,000. Then let's check again. Now, payment of 12,000 naira of rent for accommodation used as transit flats by the airline crew. So the airline crew, this is not discriminatory. When there is going to be a transit, so it means that when they fly to Kaduna Airport, the airline crew are going to use that flat. So to me, this qualifies for allowable. So you leave it. So it's only this disallowable and this that should go. So what we do now is we'll pick up our calculator and we'll say, how much is that again? 1.6 million. 1,600,000 minus 160,000 minus 24,000. That will give me 1,416. So this is 1,416. Somebody is saying something. So this is the salaries and other expenses. So let's check. We have depreciation, which is disallowed. We don't take that. Other disallowed expenses, we don't take that. So the only thing we are taking is what we have just taken. Now, permit me to see what I can did in this particular example. Okay. They decided to take only the deposits of aircraft as disallowed. Okay. Now, what they did here is something here. They decide to make this one allowable. Well, to me, it's not allowable. It's arguable. But for the fact that ICANN has used that, let me reinstate this and make it allowable. Let me make it allowable. So Let me make it allowable. So I'll add back 24,000 to this, because it was deducted. Let me add it back. So 1440. That's the reason why I went to look at ICANN, because this is, it may not give the kind of ratio that we want for class purpose. 1440.
Sorry, I have a question.
Sorry, I didn't get that.
I have a question. So for the sake of exam, do we just allow that particular expense, like any
It
expense
depends on the
on?
person who is going to mark it. That this is just for class purpose. They might give you in the exam purpose, it will, the way it will be framed, you will know if it is allowable or not. So,
Yeah, but I
so
mean, what you
if you
said,
decide, if you decide to,
sorry, 1 second, please. Your argument was that because I mean, it was not for all the passengers from the VIP, so and then it's not spent for everybody, just for VIP. That's why you said that it shouldn't be allowed. That was your argument. So, but because ICANN has now included it, what if an exam, I mean, the exam, and there's something in that relation whereby amount is spent on some particular set of people, some particular set of people are given more privilege than the other. Do we allow or disallow? Because
just told you
you're saying you're
now
going to,
that it's
sorry?
arguable. And I said also, it also depends on who is going to mark it.
Yeah, but we don't know.
So
We need
there's
to
nothing
know
like
now in
case
class.
of
Should we
exam.
allow
If
it?
something is allowable or not disallowable in this case, it means there is no universally stamped in this issue.
So we
Meaning
have to go
that
to our discretion.
somebody can say it is not allowed and will still get the full mark. Somebody will say it is allowed and will still get the full mark. But your answer should be different. Now, ICANN is not going to be looking out for your exact answer. This is not an objective. This is not JAMB. They are looking for you to show your skills.
Mr. Chima, please quickly scroll this thing up while you explain. I want to write.
Okay?
Sorry, sir.
ICANN is
Yes,
looking
thank
out
you.
for your skills. ICANN is looking for competency. They are not looking for exact figures.
Okay. You said
So I said this is arguable, but I want to get something that you can relate. That's why I decided to go with ICANN. I can decide not to do that. And I can say that the VIP lounge is a discriminatory expenses and it's not enjoyed by all the people. But other people will say, okay, in another sense, people that are in that flight, they paid different amounts. They paid business class, they paid economy, and they are in the same flight, but they paid the same amount, different amount, and they still call it revenue. And so if they reserve something for them as VIP from what they have paid, they might allow it. That is from another angle. And I've
okay.
also told you that it also depends on who is marking. Somebody might be like reasoning the way I was and say, no, this is not allowable, and will just take it that way. Another person will go to that school of thought. So do not be worried about figure and say if this exam. ICANN is not looking for figure. ICANN is looking for competence. And you may have different answers and you score the same mark.
Okay.
All right, so let's go. Now that we have established this, let's minus. So this is 1440, 2400. Now we have 960. So this 960 now becomes our worldwide profit.
Profit.
960,000 becomes our, I'm using worldwide now. worldwide profits. All right. So now the next thing to do here is to get your
APR.
APR. Your APR is going to be your worldwide profit all over your worldwide income multiplied by 100%, which is the same thing as 960,000 all over 2.4 million. Let me be sure I got that right. 2.4. Yes, I got that right. 2.4 times 100%. So what's the final answer? I have 960 here divided by 2.4 million times 100%.
40%.
So that's going to be 40%.
40%.
40%. Right? Then we have our depreciation ratio, which is the same thing as worldwide depreciation all over worldwide income times 100%. And our depreciation was given to us here to be 24,000 to 40,000. Guessing is going to be 10%. It's going to be 240,000 all over 2.4 million times 100%, which is 10%. And having done that, you will come now to do your total profit and tax for Nigerian purpose. Then you start Nigerian income. If I remember correctly, we had 800,000. Remember, we had 200 plus 600. Then we have Nigerian accessible profit, open a bracket, 40% of 800,000. 8 times 4. 8 times 4, it's 16. That's 32. 320. Then Nigerian capital allowance going to be 10% of 800,000. That's going to be 80,000. All right. So this is going to be 240. 240,000 here. So this is your total profits.
Sorry, please, where did we get the 40%?
Didn't get that?
The 40%, how did you choose 40?
The 40%.
Yeah.
You get the
The
40%.
APR. APR.
This is the 40% we use.
Okay.
And this is the 10% we used. And we got our total profits to be 240. Then our company income tax at 30% of 240,000. So what would that be? 24, 48, 72. Going to be 72,000. Let me check if I am correct. 240 times 0.3, 72,000. That's it. So if you check what ICANN did, we are likely to get similar solution. They are getting 30. This is where we are having a problem. Nigeria adjusted. Okay, capital allowance is 240. And I
Granted
want to
in
use
lieu.
80. What am I doing? Oh,
10% of 800.
let's read the question again. Because sometimes they will tie some of these things to the question. Let's read that question again. They said the Federal Board of Revenue has agreed to allow the company claim the amount charged as depreciation in the account in lieu of capital allowance. Now, they said the amount charged as depreciation. So it means that depreciation ratio is not necessary because they said this 240 that was charged in the account, we use it as capital allowance. So even here, even though they calculate their, they didn't even calculate depreciation ratio. So let's follow suit on that. So let's follow suit with that. Capital allowance as stated in account. So that's 240. Okay, so we have known something here now. If they ask us to do that, they certify the two ratios, the depreciation ratio would have been used. But now look at it now. The question said, so it means that understanding this question is important. So do not just rush and say that everything will be charged as depreciation ratio. Sometimes they might even tell you accessible profits. They might not tell you that the ratio is used. They might give you a fair percentage to use. And so in that case, you don't need to calculate your your adjusted profit ratio. Just use that percentage. So this is going to be 80%. 8 times 3 is 24. So this is going to be 24,000. So the tax here is 24,000. Is it 24? 8 times 3. 8. Oh,
You are using 80,000 now.
I'm still using this.
Yes.
80,000. Let me even do the calculation. 80,000 times 0.3. It's 24 now. Okay, let's do something again. 320 minus 240.
That's it.
This way I'm getting it wrong. Sorry. 320 minus 240 is 80. Now multiplied by 0.3 is 24. I'm right. Then that means their own here is wrong. So you can see that they can also make mistake. As clearly here, this is wrong. So it's 24,000. So you can see clearly it is wrong. So that's it. Now from 1988 assessment year, subsection 4 was added to section 12 to the effect that the tax payable for any year of assessment shall not be less than 2% of the full sum receivable as Nigerian profit. What they are telling you here is this. After calculating CIT, please go and do minimum tax. I purposely did not state it in the first question so that we'll read a subsection that will state it and we'll calculate it. Your minimum tax is always 2% of Nigerian income. 2%. So it means that your lowest tax will be 0.02 times 800,000. You cannot pay anything less than 16,000. So your minimum tax is 16,000. So this is your minimum tax. So this is the lowest you can pay. So why they are calculating this? Just in case your CIT happens to be, let's say, 15,000, you have to pay your minimum tax. Your CIT, if it is smaller than your minimum tax will be what paid. If the CIT is bigger than the minimum tax, of course, your CIT is what you will take. So let's revisit the first question and let's do this same thing now that we didn't do. So let's assume we calculate minimum tax at 2% of how much here? 300,000. 300,000. So 1% will be 3,000. So 2% will be 6,000. So this is like 6,000. So the smallest you can pay, 6,000. But you see, the CIT is more than this. So sometimes we don't usually calculate the minimum tax, especially so most times the CIT is usually more, but as a good practice, always calculate your minimum tax and compare it with the CIT to ensure that what you have advised as tax is not smaller than the minimum tax. All right. We said we're not going to talk about insurance companies. So what I will ask you to do is to read up this on your own and study this format. Study this format. It may not come out, but if it come out, it means that you have been prepared. Study this format. If possible, cram them if you want to. So, but we are not going to touch this, both life and non-life and reinsurance business. We're not going to touch it. If you want to read it, it's fine. Do well to cram or memorize the format and these notes. And I'm telling you, it has a 1 or 2% of chance of coming out, and then 99% chance of not coming out. So, but you can be forearmed by carrying it in your mind. So with that, we have come to the end of our question. So you can even solve this question. You can see how it is being done here. There is no question solved in this. So they just give you format. All I would ask you to do, okay, they solve the question. So look at how it is being solved. And I will tell you something. look, if ICANN is going to bring a question on insurance, they might lift verbatim from this question. If they're going to bring, they might lift verbatim from this question with perhaps a minor adjustment, maybe by adding 1 or 2 zeros, maybe 1, 2, or 3 zeros. So you do well to look at this, but we are not going to take that in class because of the high percentage of it not being testable in ICANN. But I've said you can be forearmed by reading this part on your own. So with that, we have come to the end of this topic. This topic, going to the summary to see what this topic has entailed. We have seen the procedures to be adopted for some company that are classified as special because of some certain peculiarities. And the one we only considered is shipping, air transport, courier, wireless communication companies. These are the ones we have considered. The way shipping and airline is done, or courier, is the same way that wireless communication companies are done. And so the questions you will see in ICANN study pack borders on these two. So do well to practice this in your self-study. And do well to look at these work examples. This is a work examples from, this is a flight company. You can do well to look at that. And that's it. So you can try that example on your own and look at the suggested solution. Anyone that you find difficult to understand, we can discuss it. So thank you so much for making today's class a wonderful one. In our next class, we are going to go into a different topic, a very important topic that you should not want to miss. I don't want to let the cat out of the bag today, but it's a topic that is going to intrigue you. And I said, do not miss the next class because you will be glad you attended. All right, so from me to you, I will say it's good night here and have a fruitful day.
Good night, sir.
Good night.